Palantir stock. Palantir is the top subject of today's video. We're going to speak about this right at the beginning. Palantir stock got hit about 6% plus. I got hit about $8,332 here today on Palantir stock in the public account. So they got downgraded to a sell rating. We're going to speak about this, go in depth on that one. Okay. First off here, Palantir dips after these folks. Now a lot of people don't like to look at if somebody writes a negative article or let's say an analyst downgrades a stock, whatever. Me personally, I've been doing this for so long, I actually welcome it. I love it. Tell me why my stock's crap. Tell me why my stock's going to crash. Tell me. I love it because I just love to see, am I missing something here? And then I can kind of, say, no, that's baloney, or maybe they got a good point, okay? So let's see what happened here. Palantir stock fell 2% pre-market, but obviously it fell over 6% today. So this had a very negative, weighting on Palantir stock. After these folks, Monez, downgraded the shares to sell from neutral, citing the company's rich valuation. So they went from a neutral to a sell. Rich valuation. So it's a valuation call. The firm has set a $20 price target on the stock. So they're not that crazy bearish. I mean, the stock is 23 today or so. So not crazy bearish. The analyst said that on the back of the unprecedented generative AI hype cycle, Palantir surged in 2023, and the stock's upward trajectory has continued in 2024, leaving the company with what they view as a very rich valuation. In their view, Palantir, which offers software platforms for the intelligence community, is well positioned to benefit from the long-term AI trend and can capitalize on volatile geopolitics. However, the analyst thinks that revenue from the government-related contracts has proven lumpy, execution spotty, and valuation excessive. And he believes the darkest days of the economic downturn are ahead. So they're also bearish on the economy, right? So what's my opinion on that before we react to these three videos here, okay? So he's got a point in regards to valuation if you're looking at a very short-term perspective, right? Sure, Palantir, look at the forward P of Palantir. It's very high compared to the stock market. Look at the trailing 12-month P. Sure, it's insanely high compared to the stock market, right? But Palantir just reached their infant stage of profitability. And usually what you see over the next 2 to 3 years, when you just finally turn your bottom line from basically losses to profits, is you actually see an exponential rise in terms of your earnings power, which is likely what we're going to see play out for Palantir over this next, we can call it, the next 2 to 3 years. We should see their bottom line increase dramatically. And so that will likely eat up that forward P, and it will likely end up making the company look like it might have been cheap actually right now, or at $20 a share versus looking very, very expensive, right? Now, in terms of their view on 2023, stock went crazy. It was phenomenal for all of us Palantir shareholders. 2023 was beautiful, right? And 2024 hasn't been the worst either. But remember, in 2022, Palantir stock got absolutely obliterated and devastated. And so this stock was at all-time lows in 2022, right? The stock had crashed 80%-ish from the peak that it was back in 2021, right? And that happened very, very quickly. So when you have a crash like that, there's some get back there. We're not even remotely close to where the stock used to be just a few years ago, right? Not even close. Palantir used to be a $40 stock, and we're talking about $20 a share, right? So we're still so far away from just getting back to where we used to be. We basically need a double up from here. And so, that is always kind of a moot point in regards to the stock's gone up a lot. So therefore, doesn't mean anything. At the end of the day, all that matters is valuation, where the company's going in the future. So the bottom line is if Palantir comes through this year, reports, a pretty epic acceleration of revenue growth and a bottom line that keeps beating estimates throughout the year, the stock will continue to climb. Now, if they come in and miss, then we're talking, and then, the bearish note will make sense, okay? Palantir, this is since the, shortly after, we can call it the first week of February, right? So for about the last 2 months or so, right, Palantir stock's been going nowhere, and some folks are complaining about that, right? Palantir was very exciting there for a bit, and now people are complaining the stock's so boring, it's not going anywhere. It's even downtrending here recently, so you got a lot of complainers out there now at this point in time that I guess expect Palantir to go up every day, okay? Here's the reality. In the last 1 year, Palantir stock is up 173 flipping, flapjacking percent, okay? That's a holy smokers, this ain't no dang jokers. 173%. Stocks don't go up every day. Even in this span of 173% in the past 1 year, you would think, oh, every month, every quarter, every day, week, this stock had to be up. No, look at this. Even in this 173% gain time, no, the stock had several downtrends. Right here, downtrend. Right here, downtrend. Right here, big downtrend for quite some time there. Right here, downtrend. Right here, big dip downtrend, right? Big. Into the end of 2023, while a lot of the market was going risk on, people were buying. Palantir was actually downtrending during that particular time, while the rest of the stock market was having fun, right? And then recently, downtrend, right? And despite all those downtrends I just told you about there, it's still 173% gain in the past 1 year. Come on, man. Give me a break here, okay? And I really think the only two groups of folks that are frustrated with Palantir not moving or anything like that, it's traders and it's noobs, right? And I understand you're a trader. You got short-term calls on Palantir. You need the stock to pump and move and you need it over 27, blah, blah, blah. I understand, okay? Those people they're tourists in a stock. They're not in Palantir for the long term. They're not in Palantir because of what's going on with AIP or commercial customer count. They're not in this company for Apollo and Gotham and everything they got going on in Foundry. No, okay? They're just playing this because it was a momentum play and they thought it would stay a momentum play and it didn't. So now they're frustrated. Now they're complaining, right? And the other people are noobs in the market that, don't really know patience yet. And sometimes if you're a noob, you haven't been through it yet. You haven't had enough time to really be patient. I look at a stock and I'm like, if I've held a stock for less than a year, it's literally nothing. Never mind 2 months. Come on. If I've held a stock for a couple of years, that's like nothing. I've positions in the public account that I've held since 2018, 2019. They would be a lot longer, but that portfolio started in 2018, right? So, I mean, it could be 2030 some point, and I'll have stocks that I was still holding from the 2010s in that portfolio, and from 2022, and from 2023, and 2030, right? And so, patience. Like, everybody wants stocks to just go up every single day. And I'm just like, whew, let's get back to reality a little bit here. And that's why, by the way, corrections in the market and crashes in the market are the best thing, because it keeps everybody in reality mode that stocks don't just go up every day. And you can't expect them to. And if you get frustrated because the stock go downtrending for a few months or even a year, 2 years, like you're just not, this game might not be cut out for you as an investor, right? Next up here, Nike. I want to speak about Nike for a moment here, and then we'll get into Wynn Resorts and some great news in regards to Wynn. That stock's starting to move and groove, okay? I think the moral of the story is to understand, like, Nike's short-term is crap. And everyone knows Nike's short-term is crap. That's why the stock's down 14% year-to-date. It's not down 14% because the numbers are great or the guidance is great. It's because, this is just kind of a reset year for Nike overall, okay? I love this stock, and I'm buying this stock actively because it's a buy for 2025 and beyond, right? And so I need to position into the stock before the move happens, before the numbers get great again, because the numbers aren't great right now. I don't know what that analyst was talking about in that video. The numbers aren't great for Nike. The guidance wasn't great for Nike. If you want to cherry pick a little data here and there, the short term's not there. The long term is there, in my opinion, for Nike. And I think we'll see that play out over time. And so I just, that's why I love having the reaction channel, because it gives me a chance to hear analysts, hear these different Wall Street folks, put things and they just cherry pick this data and they try to, and I'm like, no, it's not like that, man. Like Nike's numbers aren't good right now. I think they'll be great over the next few years, right? So, and by the way, the middle class, when things do get better for the middle class, which, I don't know when that is, whether that's a year from now or 2 years from now or 6 months from now, or, when things truly get better for the middle class and they're not being sliced and diced by inflation and interest rates, it's going to be a huge boom for Nike for like a 10-year span, okay? So, imagine a recession hits. Let's just play it out, okay? Let's imagine a recession hits, I don't know, next year or something, okay? It might not, by the way, but let's just say it does. Okay, recession hits next year. Fed has to start dropping interest rates. Unemployment goes up. Next thing you know, unemployment 7-8%. Hurts all companies in general in the short term. Fed drops rates to nothing, economy starts to come back, unemployment goes lower over many, many years again into the future, right? Inflation's not an issue for the middle class. Real wages can be in a decent place. And that would be like a 10-year boom cycle for a stock like Nike, okay? So, you got to have long-term vision in regards to some of these, right? All right, now let's get into Nike and Lululemon. And I am buying Nike very aggressively right now. Why am I doing it? The reason is the stock's extremely undervalued as a long-term investor. So let's get into this one.
You're not turned off by recent reports from, say, Nike or Lululemon.
I love you calling out the page count, Sarah. The question is, how far do we get? Good to see you. So I think, listen, there have been so many conversations since Nike and Lulu reported, and all of them center around the fact that the stocks went down, meaning that the consumer's not doing well. You and I were talking about Nike right as it hit. The North America number was great. And the Lulu North America number also grew 9%. And so I think it's important to acknowledge there's the stock price, and then there's what are consumers actually spending. And by and large, across a broad group of consumer discretionary stocks, average revenues were up 4 or 5% this quarter.
Yeah, but to push back against you, sir. First off, Nike numbers were not great in North America, in my personal opinion, as a Nike shareholder, as somebody that's actively buying the stock. And I'm buying it because of what I think the company will produce next year and the following year and so on and so forth, right? But short term, like, those numbers weren't great out of North America, in my personal opinion. Secondly, Lululemon, sure, 9% growth in North America. What were they growing last year at this time? 29%. So we're talking about a night and day difference there, right? Where it's like, wow, what a massive deceleration. Where's the company going next? 5% growth, 3%, 1%? That's what you got to start thinking, right?
But isn't the thing that consumer is being burdened by the cumulative impact of inflation? Consumer is changing as a result of COVID and post-COVID and travel and prioritization and groceries. And ultimately, it's just not going to result in the high growth rates that we saw for this category and these brands, past, say, what was the peak, 2021?
So I think everything you said I agree with, and I think that's exactly the point. We're looking back at the 21 peak. At some point, we have to look forward. And so at the end of the day, there's been this fear since 21 that every single consumer discretionary stock was going to have its Peloton moment, right? Another one you and I have talked about a lot. And so what that means is we had optically or artificially high revenues. People spent a lot of money. They had stimulus. They had desire to spend. There's so many reasons that 21 was the best retail probably era we will ever have. And then it followed by among the worst. Now we're back to some sense of normalization. And so I think we've been waiting for that last shoe to drop. We've been waiting to hear that all of the macro factors that you just noted that are true, right? There's no question people should be feeling that pinch, but they're still spending. And so I think there's this interesting dynamic. You and I talked about this at the beginning when the rate conversation started. All of a sudden, we're going to spend more. The problem hasn't been spending. We see that in the revenues, and I think that's important to keep in mind.
But there are also questions about, so if we're choosier with where we're spending, you really have to delight the consumer. And there are innovation questions, certainly at Nike, that other analysts have raised. It's something Nike itself has even acknowledged. I think in the last conference call and in some of their releases around restructuring and refocusing on growth areas where they've lost share, running, women's. I mean, we talk about Hoka and on. It's more competitive right now. And there are questions about whether Nike can still beat the competition on some of those core categories.
Yeah, Deckers, which owns Hoka, is not beating Nike long term. Hey, no, I'm sorry. Deckers is not beating Nike long term.
And yet, they did $5 billion of revenue. They watched the North America business grow, materially beat expectations. And by the way, they did it at a great profit. EBIT margin North America was up a lot as well. And so it's this really interesting dichotomy. And so that was why this note became 35 pages, because I think we walked in with all of those same feelings of the world is tough and all these macro factors are bad. And we can hear about the fact that on a company level, the innovation isn't there. All of that is true. And yet, EBIT dollars for Nike consolidated entity grew 23%, I believe, last quarter. So there's this element we have to sift between the narrative and the numbers because the narrative has taken over dramatically. And that's the reason Nike stock is where it is. But Nike's numbers show a different story. And so that was what we were trying.
But all due respect, this gentleman's definitely cherry picking some data here, in my opinion.
No, that was what we were trying
Making
to
Nike
tease
sound
out.
way better
Sometimes
than it was.
with a sector that's as accessible as retail is, it's very easy to go along with the story. And so taking that step back and looking, okay, so here's a business that watched its North America be and grow, and it's the largest footwear retailer around, right? That's massive. Say they grew, do it at a healthy margin. And it's not just North America, the total EBIT of the company, the total operating profit of the company grew over 20%. That's better than most of the other companies I can see, and yet the stock went the other way. I like that divergence.
Yeah, so, obviously I love Nike for the long term. I'm buying the stock very aggressively because I think, 2025 and beyond will be tremendous for the company. But that being said, the short term numbers are not great out of Nike. I mean, they're great if you compare them to other companies, sure. But you got to compare Nike to itself. And are Nike numbers impressive versus Nike? No, not right now. Okay, so they got a lot of changes they're making to the business model. The numbers will get great. But let's not fabricate and act like right now it's great.